Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed. And also, I would say please do consider joining. It is really good value for money. And without further ado, let's get into the analysis. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back, guys. This is going to be my Elliot Wave count for pound yen, pound dollar, and gold. But first of all, any views, opinions, or suggestions that are expressed in this video do not constitute to trading or financial advice. So let's get started here on pound dollar. Now, obviously, from last week, obviously this is you can see a completely different count, or it is pretty much similar, but it's just a different sort of markings that I've got in terms of the higher count. Um, but nevertheless, I did say that from last week that this would be considered as a wave one, wave two, wave three, wave four, and then a wave five. However, the wave three seems that it's not necessarily the longest wave as we have here. So if this is the wave three, which I assumed it is, and we have the wave three right here, you can see the market has just reached that. So it's kind of been invalidated. Additionally, I if the market would have respected this sort of to be a diagonal, ending diagonal right here, and we had that marking for the wave 3 as well as so it shouldn't be longer than the wave 3 of that ending diagonal. We can see from here it's reached that as well. So we have two validations. So what do we do from here? Essentially, our whole thing is that the count that we have is correct, but in terms of the higher sort of directional bias or whether it's going, it's wrong. So instead of this being a 1, 2, 3, 4, 5 wave impulse move, this now becomes an A, B, C. So it moves in a three-wave move. 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, and if that, what that basically does is puts us in a position understanding that this is not an impulsive move. This is a corrective move to the upside. So we have an A, B, C of 5, 3, 5. So a zigzag right here. This gives us a wave W. We have a nice regular flat right here, or running flat. Sorry, irregular flat, and A, B, C into an X. Then we have this as an A, B, and then a C. So on W, X. And where we are heading right now is essentially the Y wave, and the Y wave just hit the 61.8% level. Here we go, right here. So what I'm assuming is that from the week to come, we could possibly expect a three-wave correction back down, and then we'll look to continue going up one more time to the upside to give us our Y wave to completely finish this sort of cycle off. And then once we get that last push to the upside, maybe hitting around 1.4 in terms of long-term foreseeable future, we can then start to see the market eventually push to the downside. At the same time, this could also be the Y wave complete right here. So this could be the W here. Oops, sorry, the W, the X, and then the Y, and we could start to see the market just eventually just push down, down, and down in three waves, and we get a deeper correction, and then we will then correct. In that deeper correction, we'll hit around 50 to 61.8% of this entire corrective move, and then we'll then continue going to the upside. Nevertheless, I'm still going to stay with my gut, and I'm going to assume that we are essentially going to start heading for a correction back down. However, at the same time, I am looking at this, and if this is simply an A, B, and then this is a three-wave move, then we could essentially be a 1, 2, 3, a 4 right here, and then this is a 1, 2, 3. We could get one more push up and then start to correct. In terms of the smaller specific um, count. Nevertheless, the idea is I'm assuming, especially if I look at the daytime from the way last week ended, there's it just ended on a bearish note. We have a nice sort of pin bar coming in, rejection, wick rejection coming in. But don't get your hopes up. I don't think this is gonna be that sell-off coming yet. I feel like we're gonna get maybe one more push up or something, and then we start selling off. So overall, I'm assuming that for this pair for this week, we're gonna see some bearishness coming into the market. So that's pound dollar. Um, Pound yen. Here's pound yen. So I did say last week that we are gonna get this wave 4, and we finally got this wave 4, and now we're essentially heading to the upside. And I think we're gonna eventually either two things are in play, which is one, this could be a three-wave correction, and we get one more push down. That means it's a continuation of this wave 4, and then we get one more push up to the upside to give us our fifth wave, and then to complete the inner third wave and the fifth wave. Um, the second thing is that where we are currently, with this market moving, we're just going to continue going up, and that'll give us our fifth wave. That'll complete the third wave, and then we'll come down in for a fourth wave, and then go up for a fifth wave to complete, obviously, the fourth wave, the fifth wave, and then to complete the higher third wave degree. And then we're going to get a deeper correction to come back in for a fourth wave, and then a fifth wave. So something like that is kind of the way I see the market moving. But at the end of the day, we did get that wave 4. I did say last week we would get that wave 4, and we eventually did get that wave 4. So, assuming that this wave 4 is completely going to a smaller time frame, if we are bullish in this pair on this pair, and I assume that we are kind of going to be heading towards the upside for this week, um, just look for any smaller corrections, I would say, and then obviously just look to buy it to the upside. Any small corrections, look to buy it. Smaller correction, look to buy it, etc., etc. But just be also at the same time, just be a bit more careful. At the same time, we are on this sort of wave 4 lower degree structure, and ideally, I mean, to be honest, we do have a nice break of market structure right here. So I am assuming that we're going to get sort of a smaller pullback coming in, and then we'll then continue to go to the upside. So all in all, I'm going to assume that we are bullish on this pair, and let's take it to the upside. And yeah, man, we've got that wave 4 from last week, which was very nice. Here is gold. Gold has been working nicely. We currently, I mean, I've checked out some of the fundamentals with gold, and we have some of the big banks like Wells Fargo and stuff like that saying that the gold's going to hit around 2,100 to 2,200 by the end of this year or something like that. Now, I'm not going to say that if that's true or not, but I'm going to be following that bias with the bank reports that have come out. And yeah, man. I'm gonna assume that gold is gonna continue going up higher. Naturally, when we have things like an unstable economy, high interest rate, high inflation, a war going on, and so much conflict, currencies do tend to fall down, and these safe haven assets like gold, like silver, and many other precious commodities tend to go up because a lot of investors choose to move their money as they are, you can say, afraid of the consequences of what the market has got to offer them. So, you know, the way this market is moving, but I'm assuming that we are essentially going to be moving to the upside, and this could essentially just be a 1, 2, 3, 4, 5 wave here complete. And what this is essentially we're making one more move to the upside. We've got that sort of wave 4 completed on a high degree, so 1, 2, 3, and this is the wave 4. And this right here is essentially um, you could say it's a diagonal, or not really a diagonal, but you could say it is at the same time, where we have an extremely long wave 1 here, and then this is wave 2. So wave 1, wave 2, then the wave 3. We finished off that wave 4, and then we're moving up for that wave 5. One more push, and that'll complete the fifth wave of the higher degree, if that makes sense. So you know, all in all, I'll probably say we are moving to the upside. This shouldn't be an A, B, C. Um, this could possibly be essentially a leading diagonal. So we've got a wave 1 here, um, and since that is the wave 1, we've got our wave 2, and we're currently in this wave 3, whatever it is, 4, 5, and we continue going up. We're going to continue to push um, to the upside. Um, all in all, I would say just wait for a bit more confirmation. We do have a nice trend line here. Ideally, want to wait for a sort of market push down to around this level, where the market sort of broke out from, in and around the 1930 level, 1930, between 1930, I would say, 1930 to around 1934, 1935, between those areas around here. If I just add that line in right here, So you see how he's played like a nice level of support. You can say, I mean, I don't really trade support resistance, but you can see how over time it had multiple supports and touches and stuff like that around this level. Once the market reaches around this level again, you could say you could look to take it for another buy to the upside and maybe hold on for this one. But all in all, this pair I think is going to go towards the upside. And yeah, man, that's basically it. I hope you guys do like my analysis. Please do like, comment, share, and subscribe. I do have a Patreon for all those people that are interested in mentorship. The link will be in the description down below. And yeah, I see you guys on to the next one. Wassalamu alaikum wa rahmatullahi wa barakatuh.